This video is not about hype. It's not a call to jump into a risky trend. It's about understanding timing, scarcity, and long-term wealth strategy, something the wealthiest investors understand far better than the average person. You see, every major wealth opportunity in history has looked unremarkable at first. Assets that later created millionaires and billionaires often started at prices so low, most people didn't even notice them. Or worse, they noticed and ignored them. Bitcoin was once 1 cent, Ethereum was $1. XRP was less than a penny. Today, people look back and say, if only I had bought back then. But the truth is, even if they had the chance, most wouldn't have taken it seriously. Because the greatest opportunities never arrive with fireworks, they come quietly, and only those who think long-term recognize them. This is not a prediction video. It's not financial hype. It's a strategic insight into how wealth is transferred silently, from those who react emotionally to those who act intentionally. And right now, one of the most overlooked signals of that transfer is happening again. If you're willing to think beyond the next market cycle, if you're focused on building lasting wealth, then keep watching. Because what we're about to discuss could help you see what most people will miss until it's far too late.
Scarcity and early adoption logic.
Let's talk about what most people forget, how every major asset in history began as something ordinary. Bitcoin, Ethereum, and XRP didn't start at thousands of dollars. Bitcoin once traded for just 1 cent, Ethereum was $1. XRP, less than a penny. And yet, those who simply bought and held, those who exercised patience, ended up multiplying their wealth by hundreds or even thousands of times. The math isn't complicated. 1 cent becomes 10 cents. 10 cents becomes $1. $1 becomes 10. But in between those numbers is the one thing most people don't have: time. Or more accurately, the patience to wait through time. This is where retail investors often fail. They buy in only when the headlines are loud, when prices are already up, and when it feels emotionally safe to jump in. But by then, most of the upside is already gone. And when the market cools down or corrects, as it always does, they panic and sell. That's not investing. That's reacting. And it's why most people never build real wealth in financial markets. Meanwhile, those who entered early, quietly, and with a long-term view, they're the ones who benefit most. Not because they're smarter, but because they understood something fundamental. Scarcity takes time to be recognized. And by the time everyone realizes how rare an opportunity was, it's usually already over. If you understand this, you're already ahead of 90% of investors.
Data wealth gap. Most people can't afford $500.
Here's a reality check that most people ignore. In the United States alone, over 175 million people do not have $500 saved for emergencies. That's not a theory. That's data from multiple financial studies. And the number is even worse in many other parts of the world. Let that sink in. If the majority of people can't set aside $500, what are the chances they could ever afford 10,000 XRP? At today's market prices, that would require several $1,000s in capital, money that most people simply do not have. This isn't a judgment. It's a reminder of just how rare financial preparation truly is. If you've managed to save, invest, or accumulate assets like XRP while others are still living paycheck to paycheck, you are not average. You are not part of the crowd. You are in a position that only a small fraction of the global population will ever reach. That position comes with responsibility, but it also comes with opportunity. Being early isn't just about timing the market. It's about having the clarity to act when others hesitate. And right now, owning a meaningful amount of a scarce asset like XRP places you in a financial minority. Not because you got lucky, but because you chose to prepare. In a few years, many will say they wish they had started earlier. But early adoption isn't a coincidence. It's a decision. And if you've made that decision already, you're holding something far more valuable than just tokens. You're holding a head start.
Why smart money buys silently?
There's a pattern that repeats in every financial market. When prices fall, the public panics and sells. But behind the scenes, that's exactly when the smartest investors quietly step in and start buying. It's not a theory. It's how wealth has always been transferred, from the emotional majority to the disciplined minority. We've seen this happen with every major asset. When Bitcoin first started gaining attention, it was mocked by the media, dismissed by economists, and openly criticized by major financial institutions. Headlines called it a scam. Experts warned people to stay away. But what happened next tells the real story. Years later, internal reports and public filings revealed that some of the very institutions that criticized Bitcoin were quietly accumulating it behind closed doors. While the public was selling in fear, institutional investors were buying in silence. They weren't chasing hype. They were buying value while it was still misunderstood and undervalued. This behavior isn't random. It's intentional. Smart money never chases the crowd. It moves ahead of it. It doesn't announce its actions. It waits patiently, watching the market overreact, and then takes advantage of the noise. If you've ever wondered why certain investors always seem to come out ahead, it's because they operate on a different timeline. They're not thinking about the next month. They're thinking about the next decade. And in doing so, they quietly build positions that later become the foundation of massive wealth. What looks like inaction is actually a strategy. What looks like risk is actually calculated conviction. And if you're accumulating while others are hesitating, you're already thinking like smart money.
Cycle and wealth transfer pattern.
Every few years, the same cycle repeats itself, and yet, most people never learn. It starts with a quiet build-up. Prices begin to rise, slowly at first. Then media attention follows. Headlines start appearing. Social media explodes with excitement. The fear of missing out spreads like wildfire. That's when the public rushes in. Retail investors start buying at elevated prices. They're not investing, they're reacting. They chase gains they wish they had seen earlier, believing the trend will last forever. But it never does. Eventually, the momentum fades. The price peaks. Corrections begin. And panic sets in. When prices fall, the same people who bought at the top start selling at the bottom. They tell themselves the market is a scam. They blame the asset. They blame the timing. But the truth is, they never had a plan. They were following emotion, not strategy. Now here's the part most people don't see. While the crowd is panicking, smart money is re-entering the market. Quietly. Deliberately. They buy the same assets the public just sold, only now at a discount. And they hold. Not for days or weeks. But for years. This is the pattern of wealth transfer. The impatient give up their assets in moments of fear. The prepared accumulate those same assets with a long-term vision. And when the cycle turns again, as it always does, the value returns to those who held through uncertainty. We've seen it happen with Bitcoin, with Ethereum, and yes, with XRP. The charts may change, the prices may vary, but the psychology is always the same. Wealth doesn't disappear, it changes hands. From those who panic to those who prepare. Understanding this cycle isn't just about protecting your portfolio. It's about positioning yourself for the next wave of opportunity. And if you can hold steady while others react emotionally, you are no longer part of the cycle. You are benefiting from it.
Passive income through staking and long-term vision.
One of the most overlooked advantages of long-term investing is passive income. Today, it's no longer just about buying and holding an asset like Bitcoin or XRP. In many cases, you can now stake those assets and earn income while you wait. Staking allows you to generate returns simply by locking up your holdings on the network. You're not trading. You're not timing the market. You're putting your assets to work, quietly, consistently, and efficiently. And over time, that passive income compounds. Now combine that with a long-term vision. Imagine holding an asset that not only appreciates in value over the years, but also pays you along the way. That's the power of productive assets. You're not just hoping the price goes up. You're building streams of income that grow regardless of daily volatility. But this only works if you approach it with discipline. Passive income through staking is not a get-rich-quick scheme. It's not about gambling on the next spike. It's about building financial momentum over time, one decision at a time. Too many people chase instant results. They want double-digit returns overnight. And in doing so, they overlook the quiet strategies that actually create lasting wealth. Wealth that doesn't depend on luck. Wealth that doesn't disappear with the next market drop. If you understand that assets plus time equals freedom, then staking is not just a feature, it's a financial advantage. It's a tool the wealthy use to multiply their resources while others waste theirs chasing the next big thing.
Final thought. Are you the 1%?
If you have a long-term accumulation plan and the discipline to stay committed, you are quietly building a financial future that most people will never experience. Not because you found a shortcut, but because you're applying principles that truly work: patience, strategy, and consistency. This isn't just about XRP. It's not even just about crypto. It's about mindset. The mindset of someone who sees beyond the noise, who prepares while others hesitate, and who holds when the crowd gives up. That's what separates investors who build wealth from those who chase it and never catch it. Every great investor understands one truth: it's not timing the market that makes you rich. It's time in the market. The earlier you position yourself, the more powerful your outcome becomes, not overnight, but over time. So take this moment to reflect. Are you thinking like the average person, constantly reacting to short-term movements? Or are you thinking like smart money, quietly accumulating, patiently holding, and letting time do the heavy lifting? Because in the end, this is not about hype. It's not about price predictions or internet trends. It's about building something real. And if you're already on that path, then you're not just investing in assets. You're investing in the kind of financial future most people will only dream of.